Now, big tech stocks have generated impressive fortunes for investors over the past decade, but markets have seen emerging technology as strands to latch onto, which might deliver as impressive growth over the coming 10 years. Editor for Financial Mail, Marc Hassenfuss, joins us now to scan through some of the highly promising contenders. Thank you so much for your time, Marc. Now, why even look at the magnificent others when the magnificent seven is still there, still giving investors what they want?
Look, I think all investors want to bag the big one. You want the 10 bagger.
Yes.
In fact, some of these tech stocks that we talk about, they've been far more than 10 baggers.
Yeah.
I mean, NVIDIA has been incredible. But people want the next one. They want to find the next one. It's not easy, but it's in human nature. We want to know what the next big thing is.
Yeah.
So that's why we had a little look. It's not my forte. I'm not a tech guy, but the guy who wrote it, the Finance Ghost, certainly is. He loves his tech stocks, and he delved quite nicely into the options we have, which I thought were quite interesting.
Marc, it's also quite interesting that you say that everybody is looking for a 10 bagger, the next big thing. But should you actually go in with those goggles, or maybe just be a little bit more measured, and then maybe if you're lucky, you're lucky?
Look, you can always hear the stories about someone who's got the 10 bagger. So those stories are always around. And as I said, it's human nature. You want to do it. People should invest responsibly, I think. Absolutely. But I think if you want to put away a couple of percentage of your savings into something slightly more high risk, you're going to be buying companies that aren't often making profit. They're growing revenue very fast. There's no bottom line. And the multiples, for anyone who's invested in the JSE, these things just make your eyes water. I mean, I don't know these companies that well. So after Ghost wrote the story, I went to look at them, and they trade on multiples of revenue that make our earnings multiples look, it's hard to sink. It's not something you're used to. So you've got to get your head around that when you invest in these things. It's a very different environment and quite a scary one at that.
Yeah. But also, I'm just thinking, Marc, because, so much can change just even looking at the evolution of these top tech stocks. Firstly, we had the FANGs, and now we have the Magnificent Seven. So, I'm just wondering, what kind of, perspective do you need to look at this at, considering the kind of volatility and the environment that's quickly changing when it comes to these tech companies?
I think what is quite important, I suppose, this is just me, the conservative investor talking, is that maybe go back and look at the companies that have been successful. So you look at your Amazons, you look at your Microsofts, and then apply that to the companies that you're currently thinking might be the next big thing. See what they're doing. There are a whole lot of things. I think in the story we mentioned moats. Microsoft's got an incredible moat with every single bit of text based. You've got Microsoft in it, so that's pretty safe. Others, yes, it's slightly different. A company like Palantir, which I have had a look at, interesting enough, was I saw an interview with the CEO, and he's eccentric to say the least, so it piqued my interest. You've got to look at it's quite difficult. There's a lot of moving parts in these companies, a lot of things. Personally, I don't understand what they're doing. So you've got to get your head around it in your research, and that's always difficult. And as I say, when you work out the ratings and the multiples and in relation to the JSE, it's very different, and it's quite hard to get your head around. I will admit that, and maybe that's me. I'm just that kind of investor. I don't get on with that kind of stuff, and it's that expensive and that demanding. I get scared.
Okay, so where is your magnifying glass here? How far down the tiers did you go?
Yeah, I think what we try to do, and I think in the story it's quite clear that some of the companies have already kind of turned a bit of a corner.
Okay.
So some have got the cash flow going and are paying a dividend. They've got past that kind of model where it's just revenue driven, where you said this incredible revenue growth, it's growing market share, just gobbling up market share, but not actually putting the profits through. And I think that's probably a good place to start because, it means the business model is starting to work. And maybe from there you can start figuring out valuations. I saw some interesting thing about particularly Palantir where people were predicting prices, 10 times where it is now. I tried to work that out. I couldn't get it right. But, the same thing was said about NVIDIA, a few years ago. And, it did deliver. I suppose you've got to be in the game. Technology moves so fast. You've got to be on top of your game. You've got to be watching all the trends. So it's not just the company fundamentals. It's things that are changing in the world.
Yeah.
So it's a lot of research to do. I'd be inclined to go for the ETF. Buy the tech
Okay,
ETF. It's easier.
okay.
Let someone do the research for you.
Okay. Well, it's quite interesting because my next question was going to be, where your first point of contact should be with the magnificent others. You talk about ETFs being the low-hanging fruit. But in terms of those tier 2 companies, where maybe would be your first point of contact, where you start? You spoke about Palantir. Would that be it, or would there be other companies as well?
Look, reading the story, I suppose if I had to buy one, look, I'm quite tempted to buy Palantir because, as I say, I found their kind of mysterious business model quite intriguing. So that would be like a long shot. I think Accenture is quite interesting. Adobe, they quite kind of matured a bit. I like them. But going back to what you said, just go back to the ETF for a second. You mustn't lose sight of that. We had this correction earlier in the week, which is quite scary. There's always opportunities. Besides buying, a single stock, you probably should balance it. Maybe take that ETF out at the right time when there's a bit of a 5% dip on the Nasdaq, and then look at one or two of these other ones. Figure out the ones you like. Look at the business models, particularly what you think they might do in the future. Can they hold on to their market share gains? Is this something they're going to have to feed into for the rest of the days? Was it an essential service?
Yeah,
just basic stuff like that. But I wouldn't go putting all my pocket money into it.
Yeah, with the ETFs particularly, a lot of them also do they not have a lot of concentration in terms of the Magnificent Seven?
Yeah, they do.
Yeah.
Yeah, no, they certainly do. But I think you are buying then the best companies that tried and tested.
Yes.
Having said that, anyone in the ETF, tech-aligned Nasdaq ETF when the markets turned down this week would have, been quite scared. Because it was a vicious slap. We haven't seen something like it for a while. And there's a lot of nerves around there at the moment. So, maybe this cover story is quite timely.
Yeah.
Maybe there are opportunities. Maybe there are more ructions, more rattles and falling indices. Let's see. And those are always times to buy, of course, if you want to buy. That's the other thing.
Well, Marc, I'm really hoping that this new phrase, or catchphrase, magnificent others, is going to catch on. Thank you so much for your time and for your insights today. That was Marc Hassenfuss, editor for Financial Mail.